You've heard about Stoicism changing lives, but can an ancient philosophy actually boost your bank account? Today, you're about to discover 3 proven Stoic money strategies that savvy investors quietly use to build lasting wealth. And trust me, the third one completely reshaped how I see investing. Now imagine this: markets crashing, headlines panicking, and investors everywhere losing their minds. It's chaos. But somehow, Stoic investors don't even flinch. So, what's their secret to staying calm and profitable when everyone else panics? Stick around, because I'm about to reveal exactly what it is, and it might not be what you're expecting. Let's dive right into strategy number 1. Focusing only on what you can control. Marcus Aurelius, one of the greatest Stoics, famously said that the key to inner peace and success is distinguishing clearly between what's in your power and what's not. Think about it for a second. You can't control the stock market, interest rates, or geopolitical turmoil, but you can control your own reactions and investment decisions. Instead of stressing about every single market fluctuation, Stoic investors deliberately choose investments they deeply understand and trust. This means no chasing after the latest hot tip or panicking over short-term dips. For example, legendary investor Warren Buffett, someone who embodies Stoicism without explicitly calling himself a Stoic, has said countless times he doesn't worry about daily market prices because he knows they're beyond his control. Instead, he sticks to his principles, invests only in what he understands, and remains patient. And guess what? He's now worth over $100 billion. Can adopting this same mindset actually help you build your own fortune? Speaking of patience, that brings us straight to strategy number 2, practicing strategic patience. Seneca, another famous Stoic philosopher, explained that wealth doesn't come quickly. It comes through persistent, disciplined action. Unfortunately, our modern culture has trained us to seek quick wins, instant returns, and overnight success. But Stoics understood centuries ago what smart investors still know today, that the greatest financial rewards come to those willing to wait. But here's the twist: patience doesn't mean simply waiting around, doing nothing. Stoics practice what I call active patience. This means diligently and consistently making small, wise decisions each day, like steadily investing in index funds or regularly contributing to retirement accounts. Over time, these little moves compound dramatically, quietly building incredible wealth. For example, if you'd invested just a small amount consistently in the stock market over the past 20 years, without trying to time the market at all, you'd have multiplied your wealth several times over. And yet, there's something even more powerful about Stoicism that sets the truly great investors apart, because, as you'll soon discover, the third strategy isn't just about your money. It's about completely rewiring your mindset around risk itself. By now you might be wondering, how exactly does Stoicism teach us to manage risk in investing? Most people view investing risk as something terrifying, something to avoid at all costs. But what if I told you Stoics embraced risk in a completely different way? This small but powerful shift in thinking has helped investors from ancient times all the way to modern billionaires. So, how exactly do they do it? Before I reveal that, let's pause quickly. My name's Saul, and like you, I used to be overwhelmed by market volatility, always worried that the next big crash was just around the corner. That changed dramatically when I started applying Stoicism to my investing strategy. The third principle I'm about to share was a total game changer for me, and it might just be for you too. Ready to finally master financial risk in a way you never thought possible? Keep watching, because this one insight might completely change how you invest forever. This brings us to strategy number 3, the Stoic art of reframing risk. Most people view financial risk as terrifying, something to avoid at all costs. But here's what Stoics figured out centuries ago, that modern billionaires use today. Risk isn't something to fear. It's something to manage rationally. Epictetus, one of the great Stoic philosophers, taught that fear often arises not from reality, but from our perception of it. Consider this carefully. What if the fear of investing is actually more dangerous to your financial future than the investments themselves? Think about the most successful investors today. Are they gambling recklessly, hoping for quick riches? Absolutely not. Instead, they carefully calculate risk and embrace uncertainty. Not because they love danger, but because they understand it's part of achieving meaningful growth. Ray Dalio, founder of the world's largest hedge fund, repeatedly emphasizes one idea: risk can never be eliminated, only thoughtfully managed. This approach mirrors Stoicism perfectly. When you learn to calmly analyze risk rather than emotionally react to it, you turn uncertainty from an enemy into an ally. So how do Stoic investors manage risk practically? They use a simple yet powerful principle called negative visualization. Instead of imagining ideal outcomes, they mentally prepare for the worst-case scenario, making plans for how to handle those situations ahead of time. By doing this, they're never caught off guard when markets crash. They've already anticipated it and prepared accordingly. This Stoic technique isn't pessimistic. It's actually incredibly empowering. Imagine entering every investment knowing exactly how you'll respond, even in the worst-case scenario. This removes emotional panic and lets you invest with clarity and confidence, no matter what the market does. But here's the surprising twist most people miss. Negative visualization also helps investors capitalize on opportunities others overlook. Why? Because when everyone else is panicking and selling off valuable assets at a discount, Stoic investors calmly step in and buy quality investments cheaply. History shows again and again that fortunes are built during crises by those who remain clear-headed and prepared. So let's quickly recap the 3 Stoic money strategies we've discussed. First, clearly separate what you can control from what you can't. Focus on your own disciplined decisions rather than chasing the uncontrollable market. Second, practice strategic, active patience. Real wealth grows from small, wise actions taken consistently over long periods, not from quick gambles. Third, reframe risk. Instead of fearing uncertainty, learn to rationally manage it using negative visualization and careful planning. But here's my big question for you. Now that you know these 3 powerful Stoic strategies, are you ready to apply them to your own investing approach and transform your financial future? Remember, Stoicism isn't just a philosophy. It's a practical toolkit that some of the world's most successful investors have quietly used for centuries. By embracing these principles, you position yourself alongside legends who've achieved lasting, meaningful wealth without emotional stress. If you're ready to join them and finally take control of your financial destiny, now's the perfect moment to start. The question isn't if these strategies work. The proof is clear. The question is, are you willing to implement them? Because the truth is, you don't need complicated schemes or stressful market timing to build lasting wealth. The Stoic path is simpler, clearer, and infinitely more peaceful. And trust me, once you experience investing the Stoic way, you'll never look back.